frame, yes, this type of technology will be able to replace a lot of the manual tasks, the administrative tasks that we're doing. We're all going to have a personal assistant that does all the little things around us. We're still going to have to do the thinking, the imagining, the managing, but all the manual and administrative tasks that we're currently doing, we're going to be able to outsource to a computer, to an agent based on this technology. In the next 1, 2, 3 years, we're mostly going to be using it for chat, for writing code, for self-driving cars, for things that are helping us become more productive, but not really changing our lives in that material of a way. And then in terms of the 100 times need for compute, he was really referring to a micro aspect of this. The reasoning models that are being introduced require a lot more compute when we ask them questions, but we don't need those models for everything. We need those for complicated research questions. So that's only one type of application that's going to be very compute intensive. In the short term, the models are actually getting smaller. The types of questions we're asking now will be able to be solved by much smaller models that will eventually be on our phones and computers that we won't need this massive infrastructure to get. So in the short term, we're going to make incremental gains, be incrementally more productive. But longer term, there is a world where a lot of labor is done through AI, and we have to do a lot less of the things that we find boring and tedious these days.
Oh, good. Can't wait. Gil, thank you. We appreciate your time this morning.
Thank you.
Bye. Another reminder, don't miss NVIDIA's CEO, Jensen Huang. He's going to be on Squawk on the Street. That's coming up at 10:15 Eastern Time this morning. Then Jen Kramer will have even more with Huang. That's tonight on Mad Money. Squawk Box, we'll be right back.
don't say this every day. The Turkish lira is plunging today to a new record low against the U.S. dollar. There's reason why. The surprise arrest of the mayor of Istanbul, who's a rival of Turkish President Erdogan and a leading opposition figure. The mayor denied charges, including terrorism and organized crime. He is expected to emerge as the leading opposition party presidential candidate in primary elections scheduled for this Sunday. So weird. So this is Erdogan's main political opponent, and they found some stuff that he did, supposedly.
But Jimmy loves you.
Why does this feel familiar to me? And then I thought of Mayor Adams immediately, too, because wasn't he trying to help Turkey? Just with what mayors usually do to try and get an embassy rebuilt. I don't know. Anyway, a weird story. But for whatever reason, new low for the Turkish lira.
When we come back, next steps for Russia, Ukraine, and the United States following President Trump's call with Russian President Vladimir Putin. That is next when Squawk Box returns.
Apply.
Russia and Ukraine each claiming that the other side attacked some energy infrastructure overnight, just hours after President Trump and Russian President Putin agreed to a 30-day pause on energy and infrastructure attacks in Ukraine. Joining us now on what comes next is Max Bergman, Director of the Europe, Russia, and Eurasia Program at the Center for Strategic and International Studies. Can you summarize and a lot of people are trying to. Max, summarize the phone call yesterday in your view.
Well, I think the phone call was about beginning a process effectively, and Trump wants a ceasefire. And what's very clear is Putin doesn't want a ceasefire that will leave Ukraine as strong as it was to begin that ceasefire. So in order for there to be a ceasefire, Russia has laid out various demands that basically say that Ukraine stops its military mobilization and the U.S. and others stop arming Ukraine. Meanwhile, Russia would get stronger because Russia is going to be armed by North Korea, continuing shipments from China and Iran, and it would maintain its military modernization and mobilization. So I think where we are is a really long way from any lasting and durable ceasefire or peace agreement. And I think the strikes last night, I think after the agreement to stop strikes on infrastructure, demonstrate that Russia is not very interested in a lasting agreement, and Putin has not really shifted from his maximalist goals of ending Ukrainian democracy. So I think we're still a long way from any sort of lasting peace agreement.
So, will President Trump's desire to fulfill a promise to end this war, will that not allow him to be tough on Putin to the extent that the only way Vladimir Putin does anything is if he's forced to, could sanctions or tougher economic moves or threats of not re-engaging with Moscow in the future with the West, would any of those have an effect on forcing Putin to be I don't know, less dogmatic about what he wants? He's gonna try and get everything he wants unless he's forced not to, right?
Yeah, no, I think that's right. I don't think there's much on the economic side that would entice him. I mean, of course, when he invaded Ukraine in 2022, he understood there were going to be massive economic sanctions. So the economic side of this has very little impact on him. I think we need to remember he has been there for 25 years. He is becoming an older man thinking about his place in history. And when you start doing that, if Russia were to settle for essentially a ceasefire in the existence of a democratic Ukraine, Putin, in a historical sense, has lost the war. So for him, he's going to keep going. I mean, we know about this, being in long wars and quagmires, and the instinct is not to get out. The instinct is to try to win the war. And he sees an opportunity to sideline the United States. And I think the challenge for President Trump is he has two conflicting goals. One is to end the war, and the other is to essentially pull back and stop supporting Ukraine. And I think, to me, the one thing we can do is we could demonstrate to Russia that they can't win this war militarily, which would mean more U.S. aid to Ukraine, and that's not something that President Trump wants to do. So I think we're sort of stuck with the United States trying to negotiate something where we have lost a degree of leverage because we have sort of shifted from being a backer and supporter of Ukraine to being more of a neutral actor in this war.
So how does it proceed from here, do you think? I don't think Ukraine is going to agree to any terms that we're talking about here that Putin wants, even if Trump is urging them to do so, and that's going to drive another wedge.
Putin didn't agree to the terms that President Trump had struck with Ukraine.
No,
either, though. I mean, this is.
I think that Putin will drive another wedge. You saw what happened the first time at the White House. Be easy to get that to happen again.
Yeah, I mean Marco Rubio, I think, and Tim Walz did a good job negotiating a foundational agreement with the Ukrainians about what a ceasefire could look like. The ball was then put in Putin's court, and this is what the Russians do. They, find ways to sort of dice and splice and make negotiations sort of go on endlessly. And I think the ultimate objective of Russia is to play out these negotiations to look like a reasonable party that is participating in them, all the while undermining them, and then laying the blame at Ukraine's feet. And I think they can effectively do that. But I think what they want is for U.S. military deliveries to stop, for Ukraine to get militarily weaker, and to continue the war, and with the hopes that in 2026 they can, perhaps have broken down the Ukrainian military so much that they can break through. So I think this war is going to continue.
All right, Mike. You said Tim Waltz. You meant Max. You meant Mike Waltz.
Mike
Tim
Waltz
is going, go down Tesla stock. He's doing his jazz hands and, trashing Tesla stock.
It's early. Apologies.
That's okay. All right. We'll see you later. Thanks, Max.
Thanks a lot.
Okay.
It's just after 7 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick along with Joe Kernan. Andrew is off today. Among our top stories this morning, it is Fed Day. The central bank is set to reveal its latest decision on interest rates. That's at 2 p.m. Eastern Time. It'll be followed by a press conference with Fed Chair Jay Powell. That's at 2:30 p.m. Investors and economists widely expecting the Fed to hold interest rates steady, as it did in January. Reports say Morgan Stanley is planning to lay off about 2,000 employees later this month. That would amount to about 2 or 3% of the company's workforce when you exclude the financial advisors. They have 80,000 employees overall. 15,000 of them are financial employers, and they will not be making cuts from the financial advisors' ranks. Also, Taco Bell owner Yum Brands announcing a partnership with NVIDIA to accelerate the use of its AI in its restaurants, including in the order-taking process. Oh boy. Yum has already been piloting NVIDIA technology in some Pizza Hut and Taco Bell locations. A broader rollout of the technology is expected to reach more than 500 restaurants across the Yum portfolio during the second quarter.
Those guys eat what they kill.
The
financial advisors.
That's why they're not laying off any of them.
That would make no sense.
Yeah.
So they want to. Anybody else does that, they will hire people
Right.
that are leaving.
That's why they said the layoffs will come from everywhere.
Yeah, they try and give them deals. They try and give them increased payout. I remember.
Rolodex.
Yeah, they cost them nothing.
Rolodex, that's how old they
A
are.
phone bill and a computer terminal, and then they got to call and generate all their own revenue.
Yeah, it's a big firm, 80,000 people, but 15,000 of them are financial
That'd be the
advisors.
last guys. They'd be like 30,000 financial advisors.
Correct.
Yeah.
All right, let's get another check on the futures this morning. We're still in the green, not quite as strong gains as we had seen about an hour ago. You will see the Dow futures are up by 32 points, NASDAQ futures up by 60, S&P futures are up by 13. Let's get over to Frank Holland. He's got a look at this morning's pre-market movers. Frank, welcome back. It's good to see you.
Yeah, good morning, Becky. Great to see you as well. Joe, good morning to you. Let's start with one big mover this morning. We're talking Goldman Sachs moving lower on a downgrade from Oppenheimer, moving the big bank to perform. Analysts say there are just no current signs of the M&A rebound that was expected at the start of the year. They also expect investment banking to remain muted for the rest of the year. You can see Goldman shares moving almost 1% lower year to date. Goldman shares down just about 4.5%. You can see big decline in this bank, along with a lot of parts of the market since about mid-February. All right, another mover this morning, Texas Instruments. Those shares moving lower, down about 0.5%, even after an upgrade from Citi, giving it a buy rating, and naming the chip maker a top pick. Analysts say they're really bullish on the analog sector, where chips are used to power industrial applications, and they believe a recovery in sales is imminent because according to their data, the inventory is historically low. Taking a look at Texas Instruments shares, down just about 0.5%. Year to date, falling just about 5%. And taking a look at Tesla shares, they are moving higher this morning after an upgrade from Cantor Fitzgerald. Analysts say they actually visited Tesla HQ on Tuesday, and that included the Gigafactory and the company's AI data centers. Analysts issuing a price target of $425. And you can see the stock's trading at about $231 right now. Shares up just about 3%. They say right now it's an attractive entry point considering the scheduled launch of robotaxi in Austin this year, and also full self-driving both in Europe and in China. The keyword there is scheduled. As you can see, those shares are still down more than 40% year to date on rising competition in the EV space and some investor concern about Elon Musk being a bit distracted from his businesses. Becky, back over to you.
Frank, thank you. And I was just thinking you match perfectly with the charts. The
Yeah.
dark blue, the red. Good luck,
I try to
man.
be stylish, but I don't
I
have
like
a crystal
it.
ball. But I'm always trying.
You are channeling someone we all know and love, DJT. He always wears the navy and the red. Frank, that's what I was thinking.
Is that what
Frank's
you're
got his
thinking?
own look with that.
Joe,
Frank's got his
honestly,
own
He's
look.
got his
I
own
try to
look.
pattern my fashion after you. You're my fashion icon.
Okay.
Frank, we missed you. We're glad you're back. Thank you.
It's good to see you guys.
Okay, we'll see you later. After 2 days of gains, broader averages lost ground yesterday, although our next guest says the bottoming process may have already started. Mark Newton is Global Head of Technical Strategy at Fundstrat. And Mark, I think you go even further than that. You think we may have bottomed out last week. What are you watching that tells you that?
Hi, Becky. Hi, Joe. Good morning. So there are a couple of things that are interesting that have recently just happened in the last week. We're starting to see evidence of fear actually turning to capitulation. And when I say that, I mean that not only have we seen the inversion in the VIX curve, but recently we saw last week the equity put to call ratio now is right close to 1, and it registered at 0.95 last week. And so normally when you see a level of puts that are being bought similar to a level of calls, you're getting towards a level of fear that normally coincides with a bottom. You follow that up with this past week, we saw last Friday and Monday what we call a 90% up day, or more than 90% of all stocks were in advancing issues versus declining. So normally after a steep decline and we see evidence of not only some capitulation but also now some decent movement to the upside, it means we're getting very, very close to a low.
Mark, Tom Lee, I think, was channeling you on that Monday when he was on, and he got some flack. He tries to be too exact with calling tops and small moves, but he was early in terms of calling a bottom, and I think he was saying that you saw some of that on that Monday, and I think he got pretty close, because by that Friday, it looked like maybe there was some stabilization last Friday. You know what I'm talking about? Did you see Tom come on and say that technically, I think you thought the market would bottom that week?
Of course, Joe. Look, I watch all your shows, you know, like just like everybody. But look, I make a couple of points. I think that
You're coming back.
not only sentiment has gotten so extraordinarily bearish, but we haven't really seen the movement in high yield like we see normally if we're going to see a true market sell-off that normally sends real widening out in junk bond yields, the spreads compared to treasuries, and that's one thing. So everybody has gotten so enamored about tariff that I think so much has already been built in that honestly I don't think the economy nor the earnings really justify this level of fear. And I think that's important. So breadth has actually held up better than what we saw at the January lows. When we look at things like percentage of stocks above their 50-day moving average, for example, or above their 10, we never really got to those levels.
That's what I would say too, Mark. That you talk about capitulation. It doesn't feel like there was enough of a sell-off to have capitulation. I think of a 15-20% pullback before I really think about somebody throwing in the towel and stuff.
What Tom will tell you also is, look, valuations have come in much more favorably now in terms of being in line with where things should be trading, and technology is still going to be the largest profit center for 2025. So I know people have said, well, the Mag 7 trade is dead. They've become the Lag 7, but I just don't think that to be true. So yes, of course, now we're in, you know, March Madness in more ways than one, but you know, technically a lot of these charts still look in great shape on an intermediate term basis. We've seen 20-30% sell-offs on a lot of really key names. Many of these are now, you know, their valuations are in line. We're seeing levels of fear, but we haven't really seen sufficient. It's been an orderly decline. It's been very concentrated, and it hasn't really been the kind of larger sell-off in risk assets that would lead me to think that we're entering a bear market. So look, this is a garden variety type decline. I know it's been very extreme for those that are not diversified outside of technology. There are plenty of things that are working. Outside the U.S., we have precious metals, treasuries, but in general, you know, this should be a time, seasonally speaking, where markets actually bottom after sort of a rough first quarter. That always happens normally in the first year of a presidential cycle when a new change of administration happens, regardless of tariffs. Markets have a rough January, February, March, and then we bottom and turn higher. So I think we're very, very close, and it very well could have happened last Thursday morning.
Okay, Mark, thanks a lot.
Thank you, Becky.
All right, coming up, there could be something more important than just a decision that the Fed makes on interest rates. Steve Leisman is going to tell us what that is. That's next at 8 a.m. Eastern Time, an exclusive interview with Bank of America CEO Brian Moynihan. Stay tuned, you're watching Squawk Box, and this is CNBC.
and make it count.
General Mills shares falling. The packaged food company reported earnings of $1 a share. Estimates were 96 cents. Revenue is $4.84 billion, slightly below the 4.96 it was analysts were looking for. And the company cut its annual sales forecast, citing the impact of macro uncertainty on consumers in the current quarter. It said its new guidance does not include the impact of any new tariff actions. So uncertainty causing delayed purchases of like breakfast cereals. Does that make sense?
No. I would wonder if there are fewer people buying breakfast cereals because they're looking for less carb solutions, more protein.
Right.
A lot of the new diets that push you towards protein.
You know the small boxes of Fruit Loops?
How small? The teeny tiny ones or the
No, just not the bigger one.
Oh,
but
no,
about
the
this
family
big.
size, but the regular.
$7.
Wow. No,
Doesn't that seem crazy?
I don't
What a
think
great
breakfast
business.
cereal.
They make just vats of those things, and just to put like a couple of cupfuls in a cardboard box sell for $7.
Yeah.
How come the margins are only 1%? Maybe there's
Commercials.
Yeah.
The Federal Reserve expected to release its policy statement today, but maybe more importantly, its new forecast for the economy in the wake of big policy shifts from the administration. Our senior economics reporter, Steve Leisman, explains why Wall Street and probably the White House are watching these forecasts very closely. Hi, Steve.
Hey, good morning, Becky. Yeah, for months, the Fed and its chair have tried to stay out of this political fray, refusing to offer much in the way of forecasting the impact of President Trump's extensive policy changes. Well, that changes today. The Fed has to publish its first round of forecasts since the president took office and launched those widespread changes to the nation's immigration, trade, and federal spending policies. Chris Naguha of Evercore ISI writes, "It looks to us like a tricky meeting with more than usual risk to markets. It will not be easy to kick the can down the road, so to speak, on Trump shocks that are pushing growth lower and prices higher. Watch out for the summary of economic projections." Those are the forecasts. Most Fed watchers think the Fed will mark down growth, mark up inflation. The bigger question, what does it do in that context with the outlook for interest rates? We asked in the CNBC Fed survey. Faced with higher inflation and weaker growth, 44% of respondents say the Fed will still cut. But 56% said the Fed would keep rates unchanged. We'll see how much difference there is on the Fed about that. None of the 32 respondents thought the Fed would hike in that scenario. Goldman Sachs writing, both elevated policy uncertainty and the likelihood of higher tariffs and higher inflation this year mean that the normalization cuts that the FOMC participants penciled into the dot plot, that is the forecast, at the end of last year, now look further off, giving the Fed something else to think about. The UCLA Anderson forecast, for the first time since it was founded in 1952, issued what it called a recession watch, warning that the combination of the president's policies, if fully enacted, could cause an economic contraction. This is a forecast that administration officials from the president on down have not specifically ruled out. So 2 cuts were penciled in December. The Fed might stick to that, with the question of whether they deliver and why they deliver those cuts. Becky?
So, Steve, I guess you're going to be paying very close attention to the commentary from the Fed Chair Jay Powell at 2:30, how he answers some of these questions. I'm anticipating we're not going to have huge moves or changes in expectations. Are you?
I don't think so. Last time, though, he did characterize for us how much officials had penciled in potential tariffs. So they had penciled in a little bit last time. They may do what's called, the analysts I was reading, Becky, were saying, do they do a full mark on the tariffs or a partial mark on the tariffs, as well as other policies that are out there? Becky, I want to tell you how hard this is. Yesterday, we did our CFO council. We do this every Fed meeting, talked to a bunch of the CFOs who are part of our council. And one individual said he's importing certain chemicals from overseas. He doesn't know how much extra they're going to be charged. He doesn't know how much extra he's going to charge his customers. Now, take the multiple on that times, I don't know how many financial micro decisions there are there, 10 million, and then gross that up to a macro impact. I can't do it. I don't think anybody can do it.
Okay. Steve, thanks a lot. We'll see you a little later.
AI mode.
Yeah.
Get one of the new HP calculators. Remember?
I could never use this.
I know. Because it wasn't sometimes something equals something.
Yeah.
It's some other.
Complicated other.
You remember that? I know. Coming up, the Professional Tennis Players Association calling the sport's governing bodies a cartel, launching a lawsuit against the ATP, the WTA. The group's executive director is going to tell us about the legal action and what it hopes to achieve. That's next when Squawk Box comes right back.
Time now for today's AFLAC trivia question. What was the last Elvis Presley song to hit #1 on the charts before his death? The answer when Squawk Box returns. Apply. And now the answer to today's AFLAC trivia question. What was the last Elvis Presley song to hit #1 on the charts before his death? The answer? Suspicious Minds in 1969.
Wow. Yeah, so 1969. I thought he had one in the 70s. Hunka Hunka Burnin' Love. But it wasn't. The Professional Tennis... Professional Tennis Players Association, co-founded by Novak Djokovic, calling the governing bodies of tennis a cartel. The group filing lawsuits against the ATP and WTA tours in the U.S. and U.K. and EU, and calling for a fair system that ensures the same protection and economic opportunities as professional athletes in other sports. Joining us now from Washington, D.C., PA Executive Director Ahmad Nasser. The Journal has a piece, Ahmad, that just, I don't know whether it's too simple, if it distills it down too much, but it says it's just about the grueling schedule and how long it goes and how difficult that is on everyone, the 10-month schedule. Is that it? It's usually about money. That's what I found. What do you want?
It's all of the above. First, thank you for having me on. It's good to see you again.
It really was an unprecedented series of sweeping legal actions in the US, UK, and EU, challenging the entire system, which certainly includes the schedule, but also includes rigging and fixing prize money illegally. It includes a global conspiracy. You mentioned the word cartel before we went into break, and that's exactly right. From the biggest tournaments to the smallest tournaments that are held on 6 continents, really across 12 different months of the year. But it includes anti-doping, onerous anti-doping regulations. Those have obviously been in the news a lot in the last few months. It includes the schedule, prize money, and really an overall rigged system that stifles innovation. And it's the kind of innovation that fans want and that other sports have seen and that have really powered tremendous growth in the rest of the sports business world over the last few decades.
Who else wants to have tournaments that are shut out right now? That there's other people that have approached the tennis players and they're not allowed. You're not allowed to do that because it's prohibited.
Yeah, it's both that. It's both any kind of innovation from the outside in, but it's also innovation from the inside, right? So right now there's a locked system and different levels of tournaments. And any tournament that wants to do more, wants to go to a different date, wants to pay more to the players, they're not allowed to do that because of this global conspiracy that rigs the entire professional tennis ecosystem.
It's a little strange because we think of tennis as being one of the models for pay between men and women being equal, given that Billie Jean sort of spearheaded that so long ago back. It was unheard of back in the 70s.
It was unheard of, and they were true pioneers. But here's the dirty secret about professional tennis. Here we are 50 years later, and there's still not equal pay across the entirety of the tour. And there is at the Grand Slam level, starting with the U.S. Open and the charge that Billie Jean King led over 50 years ago. But we're still not there. And so that's precisely part of the problem that we're trying to address here, because we need to see that. It's 2025. It's been far too long.
This has, Ahmad, I don't know what we think of Novak at this point. I mean, he was very, he didn't care what people thought of him or what happened to him if he didn't take that vaccine. And in hindsight, I don't know whether he's been proven correct or whether, does this have anything to do with how he was treated in that period?
No, I can safely say no. I do think Novak is a player leader and has proven that in many different ways over the years. Part of what he wanted to do with these legal actions is also to empower the future generation of players. In fact, Nick Kyrgios gave an interview yesterday where he talked about that fact that if this is successful, it's not really going to benefit Nick or Novak or Vasek, who's another player leader and co-founded the PTPA 5 years ago. It's really going to benefit the future generation of players and all the rest that are going to come in the future.
Okay, just because that was such a big news story at the time, and everything's evolved with how we think about that entire period, which has now been 5 years ago, which is really amazing. Let's hope that's the last time we have a talk about things like that. Ahmad, thank you, and
thank you.
We'll be watching. All right, you're welcome.
When we come back, the latest read on the housing market. We've got weekly mortgage applications just out. We will bring you those numbers next. And then at 8 a.m. Eastern Time, the Fed, the consumer spending, the future of financial regulations, and much more with Bank of America CEO Brian Moynihan. Stay tuned. Squawk Box. We'll be right back.
I think to be an effective leader, the most important thing is followership. Ultimately, you can have an incredible vision, but you need people to help believe in that vision and help make that vision a reality. And that means they have to trust you with their careers, trust your vision, even if maybe they don't agree with every single piece of it.
Welcome back, everybody. The latest weekly mortgage numbers out just moments ago. Diana Olick's here. She's got more on that front. What did we see, Diana?
Well, Becky, mortgage rates rose last week for the first time in 9 weeks, and consumers did not like it. Mortgage demand fell after several weeks of gains. Last week, the average rate on the 30-year fixed for conforming loans increased to 6.72% from 6.67%, and that's for loans with 20% down. Yes, a gain, but rates were 25 basis points higher the same week a year ago. Still, as a result, applications to refinance a home loan fell 13% for the week, still 70% higher than the same week a year ago. Refinancing has been seeing strong gains as interest rates dropped recently, but there are still a very precious few who can benefit from a refinance given the record low rates seen just 3 years ago. The percentages are skewing larger because the base volume is just so small. As for mortgage applications to buy a home, they were basically flat week to week, up just 0.1%, but they were 6% higher than the same week 1 year ago. The tiny gain was due to a 3% increase in FHA applications. FHA offers a very low down payment and so draws lower income borrowers with lower credit scores. And Becky, more people are actually going to FHA now because home prices are so high, they want to keep that down payment low.
Diana, when you combine these mortgage applications along with the housing starts that we saw yesterday, how would you characterize the housing market overall?
Well, so we did see a bounce back in housing starts, but we really think that was because we saw such a big drop in January. So February kind of pulled it forward, and there were a lot of weather implications in that. What really stuck out to me was Monday, the builder sentiment numbers. They dropped again into really negative territory, and the builders were setting costs and tariffs and also buyer traffic through their showrooms. It's just not showing up. They also cited uncertainty in the economy and that their consumers were bringing that up as well. And they did start to cut prices again more than they had the previous month. So it just shows that there's a lot of pressure on the housing market right now simply due to affordability.
Okay, Diana, thank you. Take care. We'll see you soon.
Coming up, Morgan Stanley's Mike Wilson's going to join us next for his take on the market and the recent volatility, Fed's interest rate path, and much more. Look at that picture. A young-looking guy. It's awesome. As we head to break, check out the price of gold up again this morning. Smart Box will be right back. Stay with us.
Restrictions apply.
The main events for the markets today will be the Fed's decision on rates and Chair Powell's press conference. Joining us now, the very youthful Mike Wilson, Chief Investment Officer and Chief U.S. Equity Strategist for Morgan Stanley. Maybe not quite as youthful as our headshot, but you've been through a lot. We all have. We're lucky to be still standing with this market.
35 years of volatility with it.
Yeah, exactly. And you think that volatility, that's a good segue, will continue. Let's start with the Fed, though. You're down to one, your house view, Morgan, down to one cut this year, down from two. However, if things slow more than maybe you're expecting, there's a Fed put. You would see more cuts.
Yeah, I mean, I think the Fed's going to respond to lower growth. I mean, they've said as much. The question is, what is that? How do you measure that? I think clearly the labor market is the thing they're watching the most. Right now, most of the weakness in the labor market is in the government sector because they're trying to, shrink the government and maybe even cause a soft recession in government to some degree. So does that spill over into the private labor market? If it does, I have no doubt the Fed will respond to that, but we're not there yet. The other thing that could happen, though, Joe, is you get more turmoil in the markets, and the Fed has always been much more focused on credit markets and funding markets. We haven't seen that stress yet in a way that the Fed would worry about. But remember, 2018, they responded to that too.
You think recent market action has been somewhat constructive in that 5,500 on the S&P held?
Yeah.
And that sets up what you're calling a tradable range, which means we could go up enough to make it worth your while to get long?
Yeah, I mean, that's what we talk to clients about this every day. That's what they want to know, not what's happening over the next 12 months, but like, how do I make money today? So like our view coming into the year was probably a little out of consensus. We thought the first half would be tougher because expectations were pretty high on the first half. The new administration was very clear that they were going to be, sequencing their policy to be somewhat more growth negative. The tough stuff comes up front, and then the back half is when the better policy starts to flow through. So a tougher first half. I just think people came into the year a little bit complacent that the president was going to do the things he says he's doing, right?
We've been talking about this, not just this morning, but for a couple of weeks at this point. Do you think what's happening with the market is nervousness about what's emanating from the White House and the policy and the tough things they're trying to push through and, concern about whether tariffs are on or off? Or do you think there's something that's really happening with the consumer? We've heard from some retailers. We know consumer confidence numbers have taken a hit. What do you think of those underlying issues?
Yeah, I think those are good questions. I would say another variable I'll bring in a minute. So I think it was expectations versus reality. So as we all know, the market
from a stock valuation
correct. Well, not just valuation, but just euphoria around the second half of the year. Let's not forget it wasn't just the election outcome, but it was also the Fed was cutting interest rates.
Yeah.
The Fed stopped cutting interest rates in December, and valuations were high. So we had to reset sort of this continuation of what had happened over the last 6 months. So that was part of it. The other thing that happened was, yes, the expectations on the growth in the first half were probably too high. The policy is one impact. The other thing that hasn't really been discussed a lot is also this cloud around AI CapEx.
Yeah.
Kind of like that kind of got into the markets at the beginning of the year.
We heard the earnings that came out from all of the big spenders. They kind of verified that, yeah, we're still planning on spending these tens of billions of dollars.
That's right, but there's a deceleration going on. So we had to kind of work off the deceleration. That's why we think 5,500 is a good level, because assuming it doesn't roll over into something much worse, that should hold. So I feel good that there's a tradable rally at 5,500. We got wildly oversold. People's expectations now are kind of in line with reality. And now we have to kind of wait to see how all this stuff kind of plays through into the summer. If growth gets worse, then we could have lower levels. But we've had a lot of price damage over the last 3 months, not just in the S&P. I mean, the S&P is down 10%. Many stocks are down 20, 30, 40%. So the markets, as usual, got ahead of it.
For the year, growth concern and volatility, both likely to persist. What about it? So your worry is growth. You don't think inflation is even with tariffs, that's not the main thing to worry about?
No, and that's probably where we were out of consensus with most. Most people thought growth would be too hot and inflation would come back. We're in the other camp, or I'm in the other camp, which is that growth is probably going to be the concern, and we see that in the marketplace, right? Bond and stock correlation again is positive, meaning higher rates are good for stocks, lower rates are bad for stocks, and that was a real change about a month and a half ago. So until that flips again to negative correlation, we think the equity market's focus is on growth.
Growth. So we want to watch something. You're watching, I'm sure, with great interest every single indicator, government indicator, consumer sentiment, all that stuff. On a macro level, when do you think maybe some of the policies that at first got people pretty bullish about animal spirits, I'm talking about deregulation, keeping corporate tax rates low, whatever, got CEOs excited about another Trump administration, when does that take over and offset tariffs, what you call maybe a slowdown in the government sector because of Doge? Does it eventually become something that we see M&A, we see animal spirits?
Yeah, and I think that's a second half story.
Second half,
we've said
that soon?
Probably fourth quarter. And I think this administration has been very clear about this, that they will own the economy, in the second half, maybe the fourth quarter. I think they're laying this out. Think about when a CEO comes into a new CEO comes into a company. What do? They restructure the company. They kitchen sink it, and then their plan comes through in the next year. So, the markets will get ahead of this. So I don't think you're going to see a massive pickup in growth and all this stuff that people were excited about this year. It's going to be more of a 26 story. By the way, that's when AI productivity will start to kick into the economy. But the market will start to figure it out in the second half. And if growth gets too weak, once again, I think the Fed will respond, and the market's always like that. So it's going to be rocky, as we said, for at least 6 months, maybe 9 months. And in that process, we'll find things to do, both long and short, for our clients.
You think some of these policies will bear fruit positively for both the economy and the stock market?
Well, look, Joe, I know you agree on this. It's our best chance, right? So we have to restructure. The government is inefficient, right? And it's too big. And I don't think anybody disagrees with that. So how you
You've
do
been
it?
able to tell that I agree with you.
Yeah, well, we've talked about
Is
it.
it really that clear? I
So-
try not to.
So let's do it. Let's go down this path, and they're going to have to be flexible, just like a company would managing their business. We have to, take some costs out, and then the deregulation and lower interest rates and some of the benefits from that can flow through to the private economy later this year into 2026.
It is kind of interesting, Mike. We take it for granted that companies in the private sector are going to cull and the bottom 10%, and when they see a slowdown coming, they have to rationalize. They might even have to merge. We think it's just taken for granted. The government has never had to do that, ever.
Right, it's a restructuring.
All you do is raise taxes.
In the Clinton administration.
That's right,
It
the
doesn't-
90s. Becky said, right. in the 90s.
2025. It's 2025,
But we've
and it's
seen-
been
we've seen
growing
it done
since.
before, yeah.
Right.
Look what it did for the stock
But
market.
it's not like crazy. It's not the end of the world. It's not a dictatorship or unconstitutional to try to just put mind your P's and Q's when you're trying to run something. You know what I
Absolutely.
mean? Instead of just raising taxes. Mike, thank you.
Thank you. Thanks for having me.
All right, when we come back, 2 astronauts stranded in space for 9 months, finally returning back to Earth. We'll bring you the latest details next. Squawk Box. We'll be right back.
Assurance.
NASA astronauts Butch Wilmore and Sunny Williams are finally back on Earth after their week-long stay in space turned into a 9-month grind. Their SpaceX Dragon capsule splashing down off the coast of Florida yesterday around 6 p.m. Eastern Time. There it goes. A pod of dolphins could be seen swimming near the craft as it bobbed in the water, and the astronauts waited for help from a fleet of recovery boats. Williams and Wilmore blasted off from Earth in Boeing's Starliner capsule last June on what was expected to be a week-long mission. The problems with the spacecraft turned into a 9-month delay, casting doubts on Boeing's space program overall. Elon Musk's rocket company, SpaceX, was eventually recruited to help bring the astronauts home. Now that they are back on Earth, NASA doctors will be watching Williams and Wilmore's cardiac health, their blood pressure, their vision, neurological functions, I think bone density, and what's happened with some of those things along the way.
Busy because of your inner ear didn't have gravity for so long.
I would not be able to.
Supposedly your
That's why they're carrying them out.
one of the astronauts was talking about his every time he stood up after he got back, the blood would all flow down to his legs because your whole cardio system was thrown off. I wonder what would really, if it would ever be irreversible. Like 3 years? What if you're up there for 3 years? What does that look like?
What's the longest? It's been over a year.
It's definitely been over a year.
But I don't think they've done 2 years.
No. Just because we evolved with all this gravity.
Yeah.
So we're not really things. I don't know what you'd end up looking like. You end up looking like that Disney, that Pixar, those fat people in the chairs just eating. Coming up, yeah, we'll be right back. Wally.
Restrictions apply.
Welcome back, everybody. President Trump has fired 2 Democratic commissioners from the Federal Trade Commission, leaving 3 out of the 5 seats vacant. Joining us right now on the latest developments and what they might mean is Barry Nigro. He is former Federal Trade Commission's Deputy Director for the Bureau of Competition. He's now a partner at Fried Frank. And Barry, let's talk about what's happening here. This is something that the White House is doing, saying that they have authority to do it. It does go against a 90-year-old Supreme Court ruling. And I guess this sets up for a little bit of a battle that very likely is going to get picked up by the Supreme Court.
Good morning, Becky. You're exactly right. There are two very old cases in the Supreme Court. One dating back to around 1926 that made clear that the president has the ability to dismiss Senate-confirmed executives within the executive branch. The other case is a 1935 case, a well-known case called Humphrey's Executor. And that case held with respect to these sort of hybrid regulatory agencies that the president needs good cause in order to dismiss officials. And that's because the statute that authorizes those agencies had specific language in it that talked about the need for a finding of inefficiency, neglect of duty, or malfeasance. Some have questioned whether that case is still good law, and what happened yesterday is not a complete surprise in the sense that the acting Solicitor General of the Department of Justice just recently issued a letter stating that the Department of Justice believes that Humphrey's Executor was wrongly decided. And I think what's happening now is the White House is looking for an opportunity to get that issue before the Supreme Court again in order to have them sort of reevaluate whether that case is still good law or not.
It seems like it would be a little jarring and a little hectic if every president who came in fired every commissioner who disagreed with him anywhere. But I guess that's what you're talking about. Are these agencies going to be reflections of the party that occupies the White House at any point, or will they have more of a bipartisan feel to them and something that's maybe a little more continual administration to administration?
I mean, that's exactly what happens every 4 years within all of the executive agencies.
Yeah.
And the question you raise with these bipartisan agencies is whether whether the turnover is going to be disruptive. I mean, one thing to keep in mind is that most of the decisions of these agencies, and I'm most familiar with the FTC, are unanimous. I mean, the two Republican commissioners, Chair Ferguson and Commissioner Holyoke, they voted along with the Democrats for several of the last merger enforcement actions. Most of the decisions, 90% plus, are 5-0 votes. So I'm not sure.
I thought Ferguson said that he, when he was in the minority, had written hundreds of dissenting opinions.
Well, when it came to merger enforcement actions, by and large, they supported the actions that were brought by the last administration. And if you look back over the last 20, 30 years, you'll see that most decisions, I think in excess of 90% are 5-0. So there are differences on the margins, but by and large, there tends to be a lot of consensus at the agency.
Let's talk very quickly about the Google Wiz merger that was announced yesterday, or the purchase of Wiz by Google. This is a big deal, more than $32 billion for the price tag on that, the biggest Google has ever done. This is being seen as a litmus test by the markets as to what this new antitrust enforcement agency, well, between the Department of Justice and the FTC, what they'll be doing with mergers and acquisitions, especially in big tech. What do you anticipate happening here?
So a lot of people will be watching this, no question. It's a large deal. It's in tech, and the current administration has said that they're going to take a close look at tech. It involves cybersecurity. I think this will be most likely looked at by the Department of Justice, not the FTC. DOJ has handled most of the recent matters involving Google. They handle cybersecurity, they handle tech. and so I expect it'll land on Assistant Attorney General Slater's desk. The leadership team there is enforcement-minded. I worked with all of them in the first Trump administration, and I'm expecting that this will get a very close look. Just given the size of the deal, given the position of Wiz in the market. I mean, currently, I think Wiz is serving some of Google's competitors, and so that will raise some of the usual vertical issues that the Trump administration and the Biden administration took a close look at.
Barry, thanks for your analysis.
You're welcome. Thank you, Becky.
Nobody beats you with. I had to say it. The first time today. It's 8 a.m. on the East Coast, and you're watching Squawk Box on CNBC. I'm Joe Kernan. Along with Becky Quick Andrews off today, among the top stories that we're watching, the U.S. Central Bank is going to reveal its latest decision on interest rates at 2 p.m. Eastern Time, followed by a press conference with Fed Chair Jay Powell. That's at 2:30. 2:30 when you make a dental report. Investors and economists widely expecting the Fed to hold interest rates steady as it did in January. Joe? NVIDIA announcing a slate of new chips and software for building and deploying artificial intelligence. CEO Jensen Huang revealing the Blackwell Ultra, which will ship in the second half of this year. Huang also revealed NVIDIA's next generation chip named after an astronomer. It's called the Vera Rubin, which will begin shipping in the second half of next year. Huang, by the way, will be on Squawk on the Street and Mad Money with Jim Cramer today. Get a quick check. He said we had the best morning show. Did he say that when he was in here? When he crashed our set?
Squawk on the Street is a later morning show.
Oh, that's right. Okay, so between 6
and
okay,
6 and 9
the
a.m.
best morning show with a stock ticker on between 6 and 9 a.m. emanating from Times Square.
He did not give all of the
Anchored by 3 people, 2 men and 1 woman. A check on the futures right now. A little bit of green, not quite as much as we had earlier, but NASDAQ looks okay. S&P down less than 9%, or is it right around 9%?
It was like 8.7% as of yesterday's close.
From the high.
From the high, right. Bank of America is the nation's second largest bank. It serves 1 out of every 2 households in the United States, and that gives it pretty unique insight into the state of the consumer. Joining us right now in a CNBC exclusive interview is Brian Moynihan. He is the Bank of America's CEO. And Brian, thank you for being with us this morning.
It's great to be here, Becky. Good to see you again.
All right, let's talk a little bit about what you're seeing. We've been talking for a while about what's happening with the market. Part of the concern maybe is changing policy coming out of the White House, but there have been real concerns about what's happening with the consumer confidence. Some of the retailers and the airlines talking about how they're seeing some weakness, at least for the month of February, they were with the consumer. We wanted to hear from you because you have such a good feel for the pulse of the consumer, what you see happening out there.
So, Becky, I had them go and pull the information just as the most recent date they could get, so they got it through Monday. And if you look year to date, our Bank of America consumers are putting 6% more money into the economy than they did for the first 2.5 months of last year. And that's a pickup from the fourth quarter last year, which ran 4.5%. So that money is going to different places, and you've referenced some clients who might be seeing different things, but a lot on services, a lot in entertainment, but the spending levels continue to go up. And so we're in this classic moment, which we've been in various times, as you and I have talked to the last few years, where the consumer is saying, I'm getting more pessimistic in some of the surveys and things like that. But if you actually look what they're doing day to day, they continue to spend, which means the economy ought to be holding up better than people think. And so we'll see this play out. But right now, the consumer is spending about at a faster rate now than they did in the fourth quarter, and a faster rate than they did last year. And that money's going out in the economy every day. And that for a year, that amount of money going out of our accounts is $4.5 trillion. So it's not a small sample set, and it's going into all different places.
Is your point then that the ones we've heard it from, the retailers, the airlines, I mean, they're just spending it on different things?
Yeah, they're shifting to services, entertainment, eating out's been relatively stable. They may not be buying as many airline tickets. That you look at a debit and credit card data, you can see that. But at the end of the day, what I'm talking about is this quarter, $1.5 trillion will go out of our consumers' accounts in the economy. It's going at 6% more will go out this quarter than last year, round numbers. And that means it's solid. And I think that sets up what Candace Browning Platt and her team see in the research is they don't see a recession, but they continue to consider the tariff impact on GDP, and they'll keep reflecting that, but they don't see recession. They see inflation being sticky, and the Fed's going to hold rates, and we can talk about that. But that consumer-led economy that the U.S. is, that spending level, and this is what is going on, not what people project will go on. And there's great debate about that because a lot of people say this could happen or should happen or might happen. This is what they're doing so far this year.
I guess the question becomes, is it a self-fulfilling prophecy once you start to see consumer weakness, just in terms of consumer sentiment?
Well, if you think about, think of COVID and think of after COVID and think of different policies and different things going on, the stopping of the stimulus payments, you've seen the consumer confidence up and down. And I think the consumer is rightfully saying, wait, this these things may cause me to have to pay more, so let me think about that. Rates are up, and it affects car loan pricing, it affects mortgage pricing, and that has an impact. But on the other hand, the consumers have tremendous wealth built up in their homes, as you've been reporting, your team's been reporting. It's the highest it's ever been and growing. And the stock market has corrected, as you just referenced. But the reality is we're at where we are in September, and the consumer confidence in September was pretty strong. So this will sort out, and I think a lot of it has to do with the amount of changes going on with the new administration and trying to sort that out both for the consumers and companies and small businesses.
Let's talk very quickly about the Fed, that meeting coming later today. You just said that inflation has been very sticky. I think the market's trying to suss out whether the Fed would step in if we did see a dip in the economy, or whether they'd be more likely to worry about inflation as we see it right now, not being completely back to their 2% target, and any potential inflation that could come from tariffs. Where do you think the Fed is going to be putting more of its focus?
Well, so let's go back to what the broad outlines. The Fed's going to reflect what they see in the stats and the data. They've been clear about that. If you look at what our team sees and what they project the U.S. economy to slow down this year from a high 2% growth rate to closer to 2%. And the tariffs, they think, are about a 40 basis point hit to growth, especially in the first part of the year as people adjust to them. And so right now they have 2.5% for the first 2 quarters of this year. My guess is as those tariffs become more real as we move to the April 2nd date, et cetera, they'll bring that down a bit and probably closer to 2 for the year. And I have 2% GDP growth for 26. That's trend growth. That's what we've all been trying to get to for 10 or 15 years after the financial crisis. We never saw that kind of GDP growth rate except in corrective periods, and we never saw inflation. And on the other hand, inflation is stickier largely because the tariffs add to inflation. They believe that, but they think it's handleable and offset by deregulation and other things that businesses will like. And that will help profit margins be maintained and maybe not pass through everything to customer. But once you get through the other period, it'll adjust out. But they're saying that adds to inflation, so that means the Fed's probably on hold for the rest of their quote forecast period, which is the rest of this year into next year.
Hey, Brian, I want to allay your fears. I'm going to talk about debanking, but not with you because I can prove you never debanked me. So I can prove that you didn't have something against my kind. I don't know what. You did close my most convenient branch, but I'm not going to. I won't talk to you about that. But it might be an issue, and Tim Scott, the senator, does think it could be an issue. Now, President Trump is suing Capital One, saying that they closed a bunch of accounts down after January 6th without any reason for the Trump organization. And it's been done in the past. It was actually, you remember Obama with Operation Choke Point, and then Travis Hill, the FDIC acting chair, released correspondence showing that Biden regulators sent letters, don't lend to crypto. Actually, explicit letters do not lend to the crypto industry. So it's been done and abused, but I don't think it's the banks. I think it's regulators for whoever has a certain axe to grind at the time. Do you oppose having some type of legislation that would prevent regulators from doing these arbitrary and capricious things to banks and ordering them around?
Look, Joe, you've laid out all the discussions in my discussions with Chair Scott and others. Yeah, there is an issue that we are being told we have to do X, and then people say, well, that's not right. And you're saying, but we are in the middle, and it's an inch wide, mile deep hole. The penalties, the fines, the amount of work we have to do for these orders, because they're based on things like reputational risk, and and it's a zero fault tolerance viewpoint, which is you could do millions and millions of reviews, and if the regulators found one, they would exact severe penalties. So I think the goal is to get the regulation fixed, and that it's clearly not true because we have 70 million customers and we bank all different types, 100,000 plus religious organizations, et cetera, et cetera, et cetera. We bank oil and gas companies, and all the stuff that people say you don't or do. The reality is that the regulations, because they have things like reputational risk, which is viewed after the fact in retrospect, are very difficult for institutions to comply. So our industry has made it clear with the Senate Banking Committee and the House Banking Committee and the administration, if you change these rules, you will not have this vice you put the industry in. And by the way, then it's interpreted by different administrations differently. And on the crypto, I think Acting Chair Hill had it right. I mean, we were given letters that said, this is an activity we're not sure is legal, stay out of it. And we did. And if they make it legal, we'll get back in. As I said, we'll be back in the stablecoin business probably and other things like that, and so will the whole industry.
Brian, let's talk a little bit about animal spirits, because that was basically on every guest's lips starting in January, maybe even earlier than that, on the idea that the Trump administration and its pro-business policies would unleash these animal spirits. It does seem like that has slowed down a little bit. Maybe that is because of concern about what's happening with the tariffs in other places. But what do you see from all the business leaders you talk to?
Look, at the end of the day, the business community is very enthused about deregulation and getting regulation right. Whether it's the drug industry, whether it's the bank industry, whether it's all different industries, they know that they have to have fair regulation, which is based in congressional intent and people's intent, but not subject to reinterpretation by other people. And that's been a difficult thing. We've been swinging back and forth for years on regulation. So they're enthused with the idea of lowering the regulation. I think that would be good for America and also be competitive for America, and they're enthused about that. What they're trying to figure out now, and it creates a lot of debate, is that the offset to that is understanding how these tariffs will affect the trading patterns of the world, the delivery patterns of the world, the manufacturing patterns of the world, and getting that right. Because at the end of the day, this country is a big final market, as is Europe, where lots of goods are sold, and as is Canada and Mexico are part of the supply chain and part of the final markets, and as is China, and everybody's trying to figure that out. That's causing people to say, wait a second, let me look at this. Now, the reality is that if you look at the underlying consumer activity we talked about, if you look at commercial activity, their draw rates on lines of credit indicate that they're still, because a draw for small, medium-sized business on a line of credit is has a higher interest rate than it did before the rates came up. They're looking at it saying, I got to really be sure that what I do happens. And you're seeing a little more draws now. That may be getting ahead of the tariffs, but the reality is the business is still a coiled spring ready to go when more certainty comes in. And I think all businesses try to plan 1, 3, 5 years out, and if you're not sure how all this is going to work, that's going to take time. But the administration has been clear that they've got to get through a rearrangement of the economy that they're after, and they're trying to achieve. And I think as this plays out, you'll see businesses come back. You saw a big deal that you referenced earlier in the last couple of days. You'll see transactions take place, a lot of conversations. But that's just going to take a little bit of settling down for people to take off.
So Brian, net, you got what could be some deregulation in your industry that could be very good, obviously, for you. You've got DOGE perhaps starting to make a dent in just the waste and fraud and overspending from a bloated organization. You've got tax rates most likely for corporations staying at 21% when that's extended, and then you got the tariffs. Are you okay with both the good and the bad, net? Are you okay with that calculus of policies?
I think we have a great company, and we have been through all different types of administrations, including the first one, George Washington's. And so we'll adjust and make the thing work. I think it just takes time to settle into a new set of patterns. And I think that, look, the deregulation thing is real for our industry. We had a sort of behind the scenes constant ratcheting up of our capital requirements, of our liquidity requirements, and over the last couple of years, our common equity is up 25%, and our risk really didn't change, and our capital ratios reported only went up like half of that. And so you're saying that doesn't kind of make sense. So I think the new efforts in the Fed and others are going to try to put that back in the middle, and I think that's all good. And if it's good for banking, it'll be good for our clients because we'll be able to lend more money. 100 basis points of capital is a couple $100 billion lending we could do, and what seems like a little bit is actually a lot, and that's what we're trying to get through to people. And I think if you look at other industries, they're trying to figure it out, but at the end of the day, the regulatory aspects got past a point where people could function, and now they just got to figure out the tariff aspects, which are tricky depending on the industry and are more impactful on some, and don't see it play out. But I think all of us will get to the other side and figure it out as long as it becomes clear relatively soon.
Brian, we're running a headline right under you that says inflation, according to you, inflation is stickier largely because of the tariffs. Is that a fair assessment of what you said, or was it slightly more nuanced than that?
No, it's sticky before the tariffs. The tariffs then add a nominal amount to it. They're not caught. It's the stickiness of inflation has been true, and that's why we, 4 months ago, 2 months ago, took off any Fed cuts for 25 and 26 before everybody else did, Candace and her team, on the theory that this inflation was going to take longer to squeeze out. If you go ask the historians, in effect, they say it takes 3 or 4 years. And so I think people are premature how fast it will come out. And you've seen the market whipsaw on that: no cuts, 7 cuts, 4 cuts, 3 cuts, no cuts, 3 cuts. It's banging around. But the reality is you've already seen rates come down, and the Fed will have to be careful to make sure they glide the path down. So the stickiness had to do more with, before inflation. Inflation adds another 10, 20, 30 basis points, our team says, to the inflation rate, which then makes it a little higher nominally. But the reality is over time that works through because the base becomes higher, as you would well know.
Yeah, I would think, though, that the Fed would be a little cautious about cutting, not knowing what the impact of tariffs is going to be. And Jay Powell has said that they can't make policy based on things that haven't happened yet. But it would seem that maybe they'd want to hold on to the firepower that they've built up over the last year or so.
Look, in the long term, it would be a better situation if the United States had a real nominal interest rate and a real interest rate that started with a more normal front end 3%, say on a Fed funds rate, and a 4.5% 10-year rate. That is more what we have had over time. We had a very odd period from the financial crisis, really interrupted a bit by the pandemic, but long-term growth. We barely got rates up in 19, and they were cutting rates again because inflation and growth was not sufficient. So I think the trick now is not to overcorrect. And when you talk to central bankers around the world who lived through that long period of time, they're saying, wait a second, if we choke off inflation now and choke off growth, isn't that what we tried for 10 or 15 years to get to that we couldn't get to? So I think the tough part for the Fed is how do they bring this down, but not bring it down so fast they put us back in the trough of low inflation, low growth. And I think the good news is with the consumer spending we see, that's consistent with a growing economy. And they've got a real interest rate across the curve now in terms of that. They've taken a lot of monetary accommodation and shrunk their balance sheet. And so as the tariffs and other things, new policies go through, they can react to that, but they shouldn't be premature to try to goose the economy when it's growing at 2%. It's kind of interesting. People might predict 1 lower than 2 this quarter, but the reality is first quarter sometimes is lower. But if you think about it, if people are predicting 2% growth, we were dying to get there for a long period of time, and we couldn't get there.
The New York Post had a story a few days ago, a bunch of anonymous sources that they cited in this, but they were basically saying that Jamie Dimon and David Solomon have made a lot of moves to move closer to the Trump administration as opposed to you. I just wonder, have you had talks with the Trump administration, anyone in the administration, about changing regulations that are here, or the bank's relationship with the Trump administration?
Yeah, we work with every administration. We've worked with this administration and made our, both at the industry level and our company level, making our points about how we do. We always try to educate from our standpoint, our industry standpoint, what could be done to improve the economy of America and the strength of America. And we firmly believe, as a company and as an industry, that that deregulation occurs, and we're making those points, whether it's to the congressional delegations or to the Treasury Secretary or to the others, that's saying you've got to make this. You have a chance to make this swing back and get in a place where America can continue to make progress and grow. I mean, think about the length of the economic recovery. The recession was so short around the pandemic. It's been this long recovery. If we can keep this going, that's good for the United States. It's also good for the world, quite frankly.
Yeah. Brian, I want to thank you for your time today. I guess the big takeaway, though, is that you think the economy is doing better than the market may be worried about at this point, just based on the numbers that you see.
We see the consumer continue to be solid, and that should bode well for the economy. And yet there's a lot of question out there, but I think that'll sort through. But right now, we're not talking about what could happen. We're talking about is happening as the consumer continues to spend pretty strongly for the first part of this year.
Okay. Brian, thank you very much for your time today. It's great talking to you.
Coming up, the future of Microsoft's AI ambitions as competition grows with the launch of Meta's AI app this spring. It's coming. Then later, Vermont Senator and Finance Committee member Peter Welch is going to join us to talk tariffs. He held a roundtable with business leaders from both sides of the border, and we're going to find out what was discussed at the meeting and much more when Squawk Box returns. Activist Starboard Value, sending a letter to Autodesk's shareholders announcing that it it intends to nominate director candidates for the upcoming annual meeting. Starboard said a reconstituted board would improve performance at the design software maker. It currently has an ownership stake, Starboard does, at estimated more than $500 million. Autodesk's market cap right now, though, around $56 billion.
Up next, we've got a look at the executive behind Microsoft's push for AI dominance and what's been a slow start so far. And then it's Fed decision day. No changes are expected this afternoon, but we may hear some talk about their stance when it comes to tariffs and what they expect the inflationary impact could be. We're going to talk about all of this with former Fed Vice Chair Alan Blinder. Squawk Box will be right back.
Terms and restrictions apply.
It was a year ago Microsoft made a hire in an effort to reshape its AI legacy, but it's still trying to catch up. Steve Kovac joins us now to break down the story and the company's future. We want it A to Z.
A to Z in just 90
future,
seconds.
stock price,
Done.
earnings growth.
I got you covered here. But look, it was a year ago today that Microsoft, Joe, made one of its biggest hires ever. This is Mustafa Suleyman. He was named CEO of Artificial Intelligence at the company. I know he's not really a household name, but he is very big in the artificial intelligence world. He co-founded DeepMind, which that was the company Google acquired over a decade ago, now running their AI stuff there. His job now at Microsoft, make consumer AI a big business at Microsoft and compete against ChatGPT, Meta's AI, Grok, all the others we talk about every day. So far, just one major launch from Suleyman and his team, a redesign of the Copilot app. You're looking at it right now, but it's still far behind the competitors, at least based on how many people are using using it, and it relies a lot on OpenAI's technology. That's because OpenAI puts out its newest features in ChatGPT first, and later that comes over to Microsoft with some extra Microsoft coat of paint, let's call it, on the app, by the way. And then there's lots of buzz when this hire was made, and it was kind of a weird pseudo acquisition going on. Microsoft effectively acquired Suleiman's startup called Inflection AI, and practically all of those employees, along with Suleiman himself, went over to Microsoft for a one-time licensing fee of its AI tech. As for Copilot, it's gained a lot of the bleeding edge features that we talk about in chatbots, like voice and vision capabilities. Still, its user base is kind of small compared to the competition. I want you to check out this data we got from Sensor Tower. They measure app users. Copilot has 13 million monthly active users. DeepSeek, which has only been around for a couple months, has 41 million. ChatGPT sitting pretty at the top, over 400 million monthly users. All of those apps, though, by the way, they're growing pretty quickly, and Sensor Tower tells us Copilot actually grew 40% from a quarter ago. And we have some hints of what Suleiman has more coming. He's made some really big hires, including several from his former employer Google in areas like healthcare, web search, and artificial intelligence video generation. And the expectation is Suleiman's group will start making its own AI models, meaning we'll be able to push features out faster without waiting for OpenAI to do it first. And we're expecting some more big updates coming to Copilot in the coming weeks, but for now, they came out really first out of the gate with this Bing chat. Remember, we got so excited 2 years ago. They rebranded to Copilot. It's so funny to see DeepSeek come out, change the world, change the conversation, and just blow them away as far as how many people are using it.
When did I get excited? When did we get excited? Bing what?
Bing chat is what they
We
call
got
it.
excited about that.
Everyone got excited.
They were ahead of the game.
Yeah.
They did? Okay.
They were ahead.
Now they're behind.
And now they're way behind. As far as users, feature for feature, yes, it can do everything that like these chatbots do, but the idea is how do you get people using it?
Why? Why are they falling behind on that? Is it just how you plug in? Is
Bing! Bing! Yes, you binged it.
Groundhog Day.
No, I think it's a number of things. You can't move as fast in a giant organization. I mean, this is what happened at Google, too. They all got caught flat-footed by the ChatGPT moment back in 2023 and 2022. Bureaucracy. I actually talked to someone who used to work with Mustafa Suleiman, and he told me it's really interesting to see him go from a startup with a couple hundred people or however many they had to an organization. He's leading thousands and thousands of people now. It's not just the AI stuff. That doesn't mean they can't figure it out.
Problem. Bureaucracies slow everything down.
And it can, but he has a chance here to make their own frontier models to really reduce the reliance on OpenAI over time. And that benefits them. And by the way, Microsoft as a whole, not for the consumer part, but for the cloud, they benefit from all this. Even if OpenAI is doing it, even if these open source models, DeepSeek is running on Azure Cloud, they make money on all of that activity. People are paying them, but as far as consumer products, there's still a lot of room for them to go.
Heads you lose, tails I win.
Exactly.
100 times the computing power. Did you like that story?
From Jensen?
Jensen, yeah.
Yeah.
That's a lot of GPUs, but he's got to say that, right? He's got to say that.
It'd be a lot better than I mean, like I said, I think it's kind of a novelty now. I look at AI.
They're all pretty much on par. Like,
It's the stuff you don't realize is using AI. That's
But
helpful.
what happens when it's 100 times the computing power? That would be significant.
Yeah. Our jobs aren't necessary anymore.
No, I already said that. Yeah, humans aren't necessary anymore. Not just our jobs.
It's going to be Wall-E.
All we do is
Yeah.
All we do is eat and waste and expel carbon dioxide. We're out of here.
Yeah.
I'm staying. Goodbye.
They're cutting the fat in the next few years.
I still got 30 years of my career left. I don't know what I'm going to do.
30?
At least.
Yeah. No.
Joe's still.
I got 30.
Yeah, Joe.
I have 30 years left.
All right, we will talk markets and the Fed when we come back. Bye.
Insurance.
Trump Media just announcing that its Truth Plus streaming service will be available on the Roku platform. It also says it has plans in the near future to introduce Truth Plus apps for additional connected TV platforms, including Samsung and LG.
All right, let's get to Mike Santoli. He is standing by at the NYSE. And Mike, interesting day yesterday, a pullback after a couple of days in a row of being higher, and a lot of questions about what comes next.
Yes, Becky, it was interesting. To some degree, not terribly unexpected after a 3% two-day bounce, which is what we got in the S&P 500 Friday and Monday. Gave back about a third of it. I think it was relevant that it was still very top-heavy in terms of the declines yesterday. You know, breadth was better than the S&P made it look. It really was kind of a mega cap growth stock pressure point. So we'll see if we can kind of escape this trough that we're in right here. There's a lot this rally has to prove to say that last week's low was consequential. The 200-day average is like 5750. Here we are just about 5600. You want to gain back more than half of the overall losses at least before too long in order to suggest that we're not still too vulnerable right here. We're wait and see on the Fed. I don't think anybody expects too much different in terms of the characterization of the outlook, but we're definitely in a good news for the economy. It's good news for the markets mode. We want reassurance that the economy is okay. Take a look at one of the exceptions to the recent downside is Berkshire Hathaway hitting records, $1.1 trillion market cap, even in advance. And what's really interesting is how it's diverged from the S&P 500 here in this last little bit. A lot going on always. Obviously, it's a defensive asset with all the cash. Insurance has been a very strong sector. Progressive has been ripping. It's up a lot year to date, so that's the Geico business. But also, it's the largest stock in the S&P outside the Mag 7. It feels like the rotational flows are benefiting Berkshire Hathaway perhaps disproportionately. Finally, market-based inflation expectations have come in. They're around 2.4 above the Fed's target, but definitely off the boil a little bit. So it doesn't necessarily seem as if this is following those surveys suggesting a big uptick in inflation expectations.
Right. I guess, though, that doesn't take into account what may or may not happen with the tariffs, and that's the big wild card.
Well, in theory, the
Inflation
market is
still sticky.
trying to take that into account through the treasury markets, but of course we can't know with any detail.
I know. It's just so many questions swirling as to what the Fed's going to pay attention to.
For sure.
That's a big deal, too. Mike, thanks a lot. It's great to see you.
Yep.
The Fed's widely expected to hold rates steady at the conclusion of their two-day meeting. Joining us now, former Fed Vice Chairman Alan Blinder. He's now an economics and public affairs professor at Princeton University. You expect, I guess, like everyone, that they'll stand pat today. Professor, what's your total number of cuts that you're expecting this year? And do you think the Fed is still restrictive? And does that make sense given some of the policy uncertainty from the Trump administration?
I think the Fed is slightly restrictive. I wouldn't, go hog wild over it that they have a huge amount of cutting to do. What they're looking at mainly is massive policy uncertainty coming from the White House. The Fed doesn't know any more than you and I do about where this tariff war is going to end, how long it will last, how virulent it will be, and therefore, among other things, how stagflationary it will be. That's a word you're not hearing very much, but if you think about the impact of tariffs, they're like supply shocks. They are supply shocks. They're self-inflicted supply shocks. And they're coming our way. We don't know when exactly, and we don't know how severe they will be. And the Fed has got to be thinking about that quite a bit, but just thinking about it.
Right, that could be put up a damper on growth as well, and Doge theoretically could put a damper on growth.
Yes.
Do you worry about the inflationary side of things with tariffs, or do you think that the Fed's job wasn't complete with the last bout of inflation? Did they finish that job, or is it going to be new inflation? Because some people don't think tariffs are permanent inflation, like a explosion in the money supply. They don't think it's the same thing.
No, that's fair enough. I mean, that's what Scott Bessent said the other day, and that's fair enough. And unless Trump raises tariffs this year, next year, the year after, and so on, and just does it every year, that's not what you expect. You expect tariffs to run up for a period of time, probably maybe a short period of time, and then level off at some higher level than they are now, pushing up a whole variety of prices, but it's mostly a level effect. That said, if the level effect lasts 1, 2, 3 years, which it very well could, it's going to look a lot like inflation.
Right. Do you think, I was being a little lighthearted about it, but I think Chairman Powell is in a pretty good spot right now as far as Fed. They never feel like they're great and can sit back and relax, but he can almost say, I've handled this uncertainty in the global economy and trying to bring down inflation. I've handled that. Now I'm right where I want to be, and anything that happens from here, I'm just responding to exogenous factors. Do you think he orchestrated a soft landing and was responsible for what was quarter after quarter of pretty good GDP growth?
Pretty darn close. Now, Jay Powell's a friend of mine. I don't want to take anything away from him. I think he's done a very good job steering the Fed. But a lot of this was done for him, just as a lot of the inflation was done to him, not by the Fed. We had this, as we all remember, we had this terrible series of supply disruptions due to the pandemic, and especially coming back from the pandemic when things couldn't get delivered and there were shortages all over the place. That's what shot the inflation rate up into the stratosphere. Maybe a little bit about the Fed being too loose for too long, a little bit, but mostly it was the supply side. Similarly on the downside, notice, as I'm sure you have every day on CNBC, this inflation came without any recession or anything close to a recession or even much of a slowdown in growth. That's the way the central bank usually pulls inflation in an economy. He hasn't had to do that. And fortunately, I mean, there was room for a mistake then. He could have done that. They could have done that. They didn't. And that was a very good series of decisions.
It's too good to be true. You're right. Last time they call it 40-year highs in inflation. When you go back 40 years and see what they had to do to break the back of that, it was a deep recession. Deep recession.
Yeah, that was the Volcker period, and it wasn't easy.
No. Okay, Professor. Thank you. Appreciate it. Okay.
Up next, Vermont Senator Peter Welch joins us to talk tariffs and much more. And by the way, a quick programming note for you. One of the Democratic commissioners fired by President Trump, Rebecca Kelly Slaughter, will be on Squawk on the Street. It's coming up at 10:45 a.m. Eastern Time. Squawk Box will be right back.
Terms and restrictions apply.
Get ready. All right, Vermont Senator Peter Welch held a roundtable discussion with Canadian business leaders on President Trump's tariffs on Canadian goods, while Canadian Prime Minister Mark Carney said that Canada could only go so far in responding to tariffs given the mismatched size between the two economies. Senator Peter Welch joins us right now. He's a member of the Finance Committee in the Senate. And Senator, this is Vermont's biggest trading partner. That's Canada. You have called these tariffs really, really stupid. What do you think happens on April 2nd?
Well, it's going to hurt Vermont badly. By the way, Vermont is one of 34 states where Canada is our major trading partner. So it's a big deal, especially along the northern border. I see the tariffs as nothing but downside. At our tariff roundtable, where we had Canadian businesses in Vermont businesses, they talked about how this totally disrupts their supply chains, how the back and forth is going to hurt the manufacturing, the ag relationships, things that have been built up over years. Vermont's going to get hit hard because we get a lot of our electricity, a lot of our home heating fuel, a lot of our gasoline. We could see prices go up on a gallon of gas about 40 cents. So it's hard to see how the Canadian tariffs are anything good for the country, particularly when the president is linking those essentially to the 51st state talk, which is incredibly insulting and eroding the kind of trusted relationship we've had with Canada for decades.
I asked Senator whether we had our tariff full screen. I made it the other day. I'm not sure we still have it. And I have some empathy for what you're saying about Canada. I don't know if he's explicitly linked it to the 51st state. There are still a lot of dairy stuff, and there are some problems, but most of it's USMCA compliant. They're within those guidelines, which was negotiated by President Trump. So maybe this is a bargaining ploy. What about some of the, here it is, and I don't know if you've got a monitor there, Senator, but this is some of the tariffs that we see around the world. And there's still, we are treated very badly in certain places in terms of not just tariffs, but also protectionist policies that really have, accomplish the same thing. On April 2nd, would you see at least the rationale for doing some reciprocal tariffs? As a Democrat, I think it's almost impossible for you to even admit that it might make sense, even though Biden kept a lot of tariffs on.
No, I do. I can see an argument for tariffs in the appropriate case. I mean, we're getting ripped off by China. This is a good example. We've lost jobs. They have unfair trade practices. In my view, tariffs are a legitimate tool for us to protect our industries and our workers against unfair trade practices, which are well documented with China. But I think where you apply indiscriminately these tariffs for whatever reason, for quote negotiation, when in the case of Canada, it's going to have an immediate negative impact on us. And I do think this bargaining chip thing is overused by the president. It should be explicit. If there are appropriate reaction to unfair trade practices, I'm all on board. I'll be supportive. But where you're doing them because you're having this loose talk about a 51st state, and in fact, whatever you may and I may think of that, the Canadians regard that as a serious assertion on the part of the president. And it's starting to erode the confidence they have in what has been their most trusted ally. So tariffs are appropriate in the appropriate circumstances, but they're really, really damaging in inappropriate circumstances. And that is, in my view, definitely the case with Canada.
Senator, the country is so divided, and just seeing the acrimony on both sides, they can't talk to one another. They're hurling insults at one another. I'm talking about between Senator Schumer and the other Democrats on this. But this is that is a case of how divisive everything is. I know you thought I was going to say between Republicans and Democrats. But even I got you. But even within the Democrat, did you agree with what Senator Schumer did, and do you think he's being unfairly criticized for doing what he thought was right to keep the government open?
As you know, I voted no, and of course Senator Schumer voted yes, but all of us understood this was a choice that was manufactured in the Republican House, where there was no Democratic involvement whatsoever. That's not usually the case. And it was a very bad continuing resolution. By the way, among other things, the House stripped its own authority to address tariffs, and that's our constitutional right and obligation to do. So Schumer was faced with the question that a leader is faced with, which is the least bad alternative. And his view was that the shutdown would have been catastrophic. It's hard to disagree with that, but there's such an appetite for us to stand up to Trump, and I'm in that camp where he's doing these things like the Canadian tariffs that are so damaging, and where essentially he's, I think, cutting, it's an understatement to say he's cutting corners on the law.
Right. Well, I was going to talk to you, but my son likes you, says you're a great guy. I was really going to get you on. It's just Democrats are against border security, against cutting waste and fraud, against deporting illegal immigrants, against free speech that they don't like, but forced free speech for Hamas and the protesters on the cause. That put you at 25% approval right now. I mean, people voted this guy in. And I think you're lost in the wilderness, right? You don't even stand for kids that have, brain cancer and for terrorists that are captured. Do you see what I'm saying?
I do see what you're saying. And let me just say something back to you very directly. The Democrats blew it on a number of issues, and we have to have some self-reflection.
Yeah, I want to have you back. And I think I can't find people like you anymore on that side of the aisle. But will you come back? I appreciate it, Senator.
Okay, thank you very much.
You're welcome. Senator Peter Welch, Squawk Box will be right back. Well, basketball fans getting ready for March Madness, shoppers are experiencing March sadness. That's according to the author of the new retail. He joins us now to explain. Michael Zekur, 5 New Digital founder and the new retail author, is here to explain. You do need to explain because we haven't, every day we ask how people, high-end, how low-end consumers are faring in. the jury's still out. It doesn't seem that bad at this point. Michael, you have another view?
No, I actually agree with you, Joe. It's I think we're in a bit of a state of confusion here. We're getting indicators from the left, from the right, from the north, from the south. People are spending, they're not spending. We had a great holiday season. Things have tapered off. So I think a bit of confusion and maybe a little bit of March sadness thrown in there because, look, for most people, we don't know what's going to be in our wallet in the next month, 2 months, 6 months. We're hearing about tariffs and inflation isn't going away. It's coming back. Do I spend on trips? Do I spend on restaurants? What we know for sure is the University of Michigan's Consumer Sentiment Index dropped from 64 to 57 month over month. That's not good.
Yeah, Michael, the sentiment has dropped, but we just spoke with Bank of America's Brian Moynihan, the CEO, earlier this morning, and he said consumers are still spending. They've got 70 million accounts. They're watching $4.5 trillion that's spent for the first 2.5 months, all the way through, or 3.5 months, 2.5 months, all the way through Monday. The consumer spending is up 6%, which is up substantially from the fourth quarter and up substantially from a year ago, too.
Yeah, I mean, look, consumers are spending, and this is a consistent theme, Becky, when I come on Squawk Box. It's more important about where people are spending that money, right? And what we've seen even over the last month or two, even the dollar stores who 3-4 months ago were considered dead in the water had improved earnings. And I think that spending is still trending towards discount retailers. I think the Ross stores and the Burlingtons of the world and the Walmarts of the world and even the dollar stores are doing well. We've seen definitely increases in spending in travel and hospitality, but we've also seen a drop off over the last 2 months in restaurant spending. So I think it's less about, what is the total people are spending. It's more about where are they spending it and which industries, and particularly which companies in which industries should be ready for what could be a rocky next year in 25. Do people retrench to, what they need over what they want? Bit of confusion.
Michael, thank you. We appreciate your time today.
Quick look at the futures. It's over for today, Wednesday, hump day. Tomorrow, we'll be back. Make sure you join us. There's the futures, still green tomorrow. We'll be here. Squawk on the Streets next. Jensen Wong.
GTC was described as the Woodstock of AI, and this year it's described as the Super Bowl of AI. The only difference is everybody wins at the Super Bowl.
That was Jensen Wong at his company's GTC event yesterday. Good Wednesday morning. Welcome to Squawk on the Street. I'm David Faber, right here at Post 9 of the New York Stock Exchange. Jim Cramer, he is in San Jose, California, of course, where he's been all week at NVIDIA's GTC event. He will be speaking with, of course, the man you just saw, Jensen Wong. That'll be in the next hour of Squawk on the Street. Very much looking forward to that. We're also looking forward to what opened for our market on this Wednesday. Let's take a quick look at futures. You heard Joe talking about it. Seemed to have reversed a bit. We're now in the green, and that does get us to our roadmap, of course. As you might expect, it does begin with, I guess we're calling him the AI king, NVIDIA moving fast to defend its crown. Jim is breaking down the main takeaways from the company's big AI conference. Plus, it is Trump versus the FTC. The president fires both Democratic commissioners as Republican Chair Andrew Ferguson plans to keep up the pressure on big tech. And of course, we are awaiting the Fed, expected to hold rates steady, but investor focus will be on comments that we get from Chair Powell. That'll be this afternoon. As Jim likes to say, or at least I've heard you say, you don't like that press conference a lot of the time. But I want to start with NVIDIA. It's a day after Jensen Wong's keynote, Jim. He gave his thoughts on the future of AI. Take a listen.
AI is going through an inflection point. It has become more useful because it's smarter, it can reason. It is more used. You can tell it's more used because whenever you go to ChatGPT these days, it seems like you have to wait longer and longer and longer, which is a good thing. It says a lot of people are using it. with great effect.
All right, Jim, take it away. Tell me your thoughts, obviously, and clearly looking forward to what's coming up with you and Jensen as well.
Well, first, David, very few people ever just say, listen, I've got $1 trillion roadmap and it's happening sooner than you think. That almost put me in the 2028 area. What company has that kind of demand? It's just extraordinary. They can meet the demand. I spoke to Jensen about that last night. Not worried about it. Let's be pedestrian for 1 second before we go into the deep, which is that, David, the gross margins are going to expand here. And the gross margins are what kept that stock down. It's why the stock fell. The notion that a Chinese outfit, DeepSeek, has got something that's better and cheaper that can help. I think that those things were all dispelled. I think that what matters here is that there are enough product partnerships. I counted 18. There are enough companies that are desperate to get into this business, not just the usual hyperscalers. The demand here is simply insane, David. And I don't know any other company I've ever seen that can do what Jensen Huang's NVIDIA did. And that was really the notion of the keynote.
You know, when he says that the amount of computation we need at this point as a result of agentic AI, and that's something we've been talking a bit about certainly and will continue to, is easily 100 times more than we thought we needed at this time last year. Jim, it almost, it's, you know, you're not even really able to kind of comprehend what that means. 100 times?
I'm glad you put it as comprehend. When I spent some time walking and talking with Jensen, it was quite, one of my takeaways was, I'm not at his level, and I don't know how this happens. And I think that those who think that they do are also not at his level. He's thinking about 10, 15, 20 years. David, robots were the biggest theme. Why? Because we're all going to have one. Why? Because he showed you use cases. Why? Because it was very realistic and understandable, as opposed to a lot of the other things that I think are that Jensen can comprehend altogether, that we just see pieces of. We're just not up to speed the way he is. David, he's just different, and we have to admit that. You know, periodically you have Da Vinci's. Musk is a Da Vinci. This guy's a Da Vinci.
That's
actually autonomous.
I never get
That's
tired
actually
of watching.
working.
Right. That's
last
real.
year it was not autonomous.
Right.
This is real, and Jensen told me, he said, look, you can't do those things unless it's real. When I say real, I mean, it's ready to go. Now, I want people to understand that particular robot is not useful. The kind of robot that Jensen's talking about is our
cute.
size. It does exactly what we do. It will pour you coffee. It will load the dishes. It will make the bed. It will save your marriage.
It'll load the dishwasher. Do the dishes? Really? It'll do the dishes?
Yeah.
Wow.
No, David, I'm not kidding. I mean, like, you know that fork you left in the sink that made it so that your wife is unhappy with you? I mean, that's just going to disappear. I see the divorce rate being lowered by this.
You know, it's funny because we've been talking a lot about robotics, and I want to continue to talk about it. And yet I am reminded of how often I sat here with you and Carl many years ago and talked about autonomous cars being right around the corner and how it was going to change everything. And here I am. I mean, that was probably 6-7 years ago at this point, and we're still kind of waiting. And so, Jim, I do wonder, are we getting ahead of ourselves? Should we be talking as much as we are about robotics? Because obviously, if they are really as close as they seem, there's an enormous opportunity to think about in terms of supplying into them, who's going to be the leading manufacturers, you know, how you play it from an investing standpoint, not to mention from a societal standpoint. Or are we getting ahead of ourselves a bit here?
Well, I was struck at one point. Remember, autonomous vehicles and robotics are separate from the $1 trillion spend. But I did find it, let's say, disconcerting, because at one moment, Jensen announced a partnership with GM, where I went back and forth with Mary Barra during it, CEO of GM, talking about the excitement of it. But on the other hand, a lot of it was like making cars more safe. Well, wait a second. I thought that they were incredibly safe already. I mean, I don't want to hear that they need to be even safer unless the president says, you know what, the interstate highway system is now ready and we're going to have autonomous vehicles. We absolutely are getting ahead of ourselves in terms of the way that we think that they're going to be integrated into our society beyond San Francisco and soon Austin and Atlanta. We're getting ahead of ourselves because, David, in the end, it's a local issue. It's not a national issue unless the president decides that cities are disagreeing with the 11th Amendment, but a lot of other amendments have kind of gone by the wayside here. There's the right for a federal government to interfere with what a city wants to do.
Well, that we're going to get to sort of on that front a bit, but back to robots. By the end of this decade, I think he said yesterday, and he was talking about the labor shortage, Jim, something you've been talking about. And of course, if we continue with the deportation policies that we've talked about, and we make significant, if there are significant inroads made there, one would expect that worker shortage will only continue right on these shores as well. He said we're probably going to have to pay robots $50,000 a year to come to work, and so this is going to be a very, very large industry. There are all kinds of robotic systems. Your infrastructure will be robotic. Billions of cameras in warehouses, factories, 10 million, 20 million factories around the world. Every car is a robot. Again, to your point, he's very much focused on this as the next opportunity. But again, I will come back to, are we talking 2 years, 3 years, or is it really going to be longer than we think in terms of when this becomes a reality?
2 years, maybe even sooner. I know FedEx has a plant in the Boston area that is all robots. The great thing about robots, you may have to pay them that, but you don't have to give any health insurance to them. And by the way, at one point I asked them whether they complain. They don't have that level of sophistication yet to complain.
Not to mention they go 24/7. The last I heard, as long as the battery's working, I guess, right? Yeah.
Oh yeah, look, I remember when Jensen was making robots pick up Jello cubes. David, they're just so beyond that. A box could fall on a robot, and the robot would like, hey, okay, I don't care. One of the things that has happened, David, is that the robots have reasoning. That's a big leap from last year. They don't just tell you, they don't just spit out some quote. They are reasoning at a level that, I know this is going to bother you, David, but they're about to be so much smarter than we are that we will, away from Jensen, question our worth. The great thing is that there aren't enough of us. So maybe we will have to be more. That's one of Jensen's big themes. The birth rate is really low in this country. It's getting lower and lower, but that's okay. We will need these robots to do things that we kind of really don't want to do. And that's great. I just don't want to make it so that you don't need us. And there will be a time when you will question our worth.
Yep. The societal impact
David,
of AI and
if we had
robots is going to be enormous. Yeah, sorry. If we had robots,
the great thing would be if the robots would be. There's a lot of lawsuits against the Trump administration. We're to the point now where I think you need robots in certain districts. There's just not enough lawyers.
Well, he's trying to put some of the law firms out of business as well, which we haven't really discussed, but
let's slim them down.
That order from late last week on Friday was quite something as well for a number of the nation's major law firms, preventing them from doing any number of things. But you know what? I want to turn to DC. I want to turn to DC right now, actually, as well.
Sure.
But really get to this firing of the two Democratic members of the Federal Trade Commission, Jim. Both commissioners now saying they were illegally fired. One of the commissioners, Alvaro Bedoya, posted a video last night on X. You can check out his reaction.
Hi everyone, my name is Alvaro Bedoya, and I'm one of two commissioners at the Federal Trade Commission who the president is trying to illegally fire. Right now, you cannot be thinking about me. You have to be thinking about the billionaires over Donald Trump's shoulder at his inauguration. I am currently suing Amazon in not one, but two lawsuits. I am enforcing a 20-year privacy consent decree against X. I am sitting as a judge in a matter where FTC staff is trying to strengthen the privacy rules that apply to Meta. I am also sitting as a judge in a separate matter in which FTC staff is alleging that pharmacy middlemen are illegally raising the price of insulin. Who is helped by this attempt to remove me? Is it people like you, or is it the billionaires who have sent hundreds of millions of dollars into Donald Trump's pockets? That is the question to ask right now.
We're also going to be speaking with the other commissioner, who is Rebecca Kelly Slaughter. That'll be in the next hour of Squawk on the Street. Jim, the Trump administration continues to try to sort of go down this unitary executive theme and test many things that'll end up at the Supreme Court. it would seem pretty clear at this point in terms of, the quasi-judicial so-called independence of commissioners such as this one that had been established, I think it was in 1935 when FDR actually got pushback from the court. That's the road they're going down, and obviously this is another example of it.
Well, look, I think that when you think about the sophisticated way that you can stop things in government, it's always going to be with the agencies. And why? Because the people who may be ideologically different from the president, unless they've done something wrong until now, you couldn't get rid of them. You had to fire them for cause. Now, the notion that we have a kleptocracy, which is what the commissioner or deposed commissioner is thinking, just is classic Democratic thinking. It's just going to make things even worse. I think the real issue here is, do people have the power to be on a commission if they have a different, if they're in a different party, different political leanings? And look, history says they have a right to serve, but David, history is being upended at a pace that I think that we can't keep up with.
It is. Now, let's not forget, though, conceivably, if and when this does go to the Supreme Court, as I think the Trump administration is obviously trying to test these norms, so to speak, that had been set almost 100 years ago, 90 years ago. It doesn't mean that if, in fact, he gets that power, Jim, he can't remove an FTC commissioner who's a Republican as well if he disagrees with what they're doing. So, it is part and parcel of sort of what we're seeing in terms of just taking control in many ways from the executive, in all different areas.
Look, this is the way to get your agenda done. I mean, I thought about it. I don't like the kleptocracy thing because I think that it's a president would absolutely love to have that power, and no one was brazen enough to actually test it because it's been the precedent. But the president definitely wants to change the way our country works, and the agencies are where the real power is. And you heard the commissioner talk about what he is doing. And except for the last one where you're talking about insulin, I think there are many people who say, wait a second, why are they going after Amazon? I love Amazon. Why are they going after the hyperscalers? They've made our life easy. And some of this is as ideological on the Democratic side as the Republican. So it is, David, going to be a battle royal in that Supreme Court. But remember, the president has, as he liked to say with Zelensky, the cards, because they do have 5 members of the Supreme Court.
Potentially, again, there are going to be a lot of potentially important decisions. They haven't gotten to the Supreme Court yet, but that seems to be what we're setting up for at this point.
David, it's incredible that he's doing this. Let's just say, it's incredible. I mean, we wake up and this is just amazing. Upending the way our country runs because the agencies have the power, and we just say, well, if Justice Roberts decides.
Agencies have a certain amount of power, that is right, but the FTC does obviously, but he clearly wants to have the power to decide what they decide. I mean, but it comes up all the time now anyway, though, Jim, when we're trying to talk about a deal and whether or not, it's going to run afoul of the administration or not. I mean, yesterday we saw Google's big deal with Wiz. So far, nothing. So far, we've heard nothing. It's been quiet. That's what you worry about now because it's become so personalized.
Right. Totally uncertain. Yes, uncertain and personalized. I mean, think about it. That commissioner, he's working hard, but he says, I am doing this and I am doing that. And I'm saying to myself, commissioner?
I also...
What, I'm going after Amazon?
I know.
No.
That was a bit odd. That was a bit odd, the use of the I there.
I am against the companies that you like. Kleptocracy or ideological strength? I don't know. I mean, is he as powerful as the president? One of the things that people realize from that is the agencies are incredibly powerful.
All right, we got to go. I don't know. Usually those sneezes come in twos.
What's next?
Well, I meant to take a break so I can have
Did you sneeze? God bless you.
I don't think I've ever done that on air. 31
Cross
years.
country, God bless you, from Woodstock or Super Bowl. But I extended
whatever you're doing there. All right. Get ready for your big interview. Of course, we got a lot more of you. We got a Fed decision later on today as well. Let's give you a look at futures here. Looks like we're setting up for a slightly higher open. A lot more Squawk on the Street for you straight ahead.
Okay. Patriots.com.
All right, that's a look at the NASDAQ 100 leaders. Of course, pre-market, we're still 10 minutes away from an open there. Tesla, as our viewers know, been getting crushed during the course of many sessions this year. Down some 1 or more percent, but looks like it may have a positive open. MicroStrategy as well, a Bitcoin proxy. We got Jim's Mad Dash coming up.
What'd I do with it? Huh. Okay. I'm gonna add more on the car. One more time.
Apply.
All right, let's get to a cross-country mad dash, of course, for this Wednesday. General Mills reports numbers, Jim. Third quarter net sales, $4.8 billion, down 5%. Organic net sales also down 5%. They did say, 4 points of headwinds from retailer inventory reductions. What are your thoughts?
David, this ends the whole food group. Now, General Mills, we used to call it Generous Mills. Why? Because it delivered and delivered and delivered and gave you great dividend growth. Generous Mills is not as generous as it used to be. The snacking category, which had been the savior of a lot of these food groups, don't slow down. David, inventory headwinds. What does that say for everybody from Walmart to Kroger? There is excess inventory in the system from the food segment, which brings me to GLP-1s. It brings me to this existential issue: is the next generation snacking? Is it eating so-called bad foods less because their body is their temple? David, this is going to shock the whole group. And I would be very careful once again, because the group is trying to inch its way back, given the fact that there's a slowdown in the offing. This is David, this is safety last when it comes to the food group.
What are these retailer inventory reductions that they're talking about? What does that actually mean, Jim?
Too many too much cereal, too many snack bars. Well, I mean, this is the fundament of what people were moving into. People really felt that snacking was the holy grail. David, I'm telling you, safety's taking a vacation here, and I always thought that safety never took a vacation.
Yeah, interesting. North American retail segment sales down 7% for the third quarter.
Well, I can give you the answer for this one real easy.
Close eye on those shares. Of course, we've got a lot more to keep.
Inflation in the food, man. You look at how much a box of cereal costs these days. I stopped buying it. I haven't eaten cereal in 2 years. I went one time and bought some Cheerios, and I said, I'm not paying something that went up $2 in the last administration, a box. Good morning, retail traders. I changed my whole eating habits. I don't eat out as much. If I do, it's a special occasion. Because my business expenses went up so freaking high. I used to brag about how much profit I used to make. Like 60%, 70%. Now it's about 20. Not even that sometimes. And the prices will never, I mean, inflation's here to stay. At least the prices are. Let's see what's going on. I just got in. How many minutes I got? 2 sheet. Well, today's pivot point is 562.71, and the next resistance is up about $2.40. $2.40 to 565.12. You can see the pivot point. That was Monday's resistance. What is today? Wednesday. That was Friday. Resistance, and then Monday's support, yesterday's resistance, and today's resistance. So if we break that, we'll probably go up, but we got Pow Pow to deal with today. We're so uncertain what he's going to do. And then they sit out and tell you, well, he's not going to do anything with interest rates, so that's all you need to know. Powell's a wait and see reactor. I wish the government was a little bit more like him, but it's not. That means let things heal. But we did. Okay, here we go. Yesterday I was way too fast in the market, so I'm going to take my time today. I really got stuck in that trade and we just didn't go nowhere. Today we might. I called yesterday wrong. We let out with 3 white soldiers. So Intel is down 85 cents. They're pumping that just on a new CEO. And he's Asian, so I like that. He might definitely turn this stock around. Tesla's up $7. Apple's up 142. Everything's popping this morning. Amazon, Shop had a pre-market bounce. Voluntary transfers to U.S. Stock Exchange listing on a NASDAQ, Shopify. That was yesterday. Today's 19th. We have kind of like an ascending triangle here on the SPY. See that ascending triangle? That's bullish. Whoop. Buy signals coming in. Yesterday was a flat day. $567s on the SPY. I ain't jumping in yet. And then and then 5685s on the SPX. I'd like to see it come back down and hit this for the fourth time. I gotta figure out who Trump fired 2 people yesterday. I'm trying to figure out who they are. He put something on Twitter and I'm gonna call him a jackass. If I can figure out who it is. They had him on here on CNBC just a little bit ago. They were talking about him. YouTubers, if you're on Twitter, you can follow my profile under Washboardjim Retail Traders /Retail Traders. James Howard 18. And here's our pullback. Let's see what I can do with this baby. Right now we probably have a little bounce, but I'm going to wait. I'm going to see if we can get it down in here. Have to today. I mean, we got to wait for Powell. I mean, yeah, about uncertainty this morning. There it is. I'm going to give this a shot. 90 cents. the 567s. And this is the lotto. $0.89. Let's see. Tight stop. Magnificent. Capitulation. Capitulation. Remember you saying that last week? I heard the word this morning. There we go, baby. Take some profit. What do you got to say about that, gentlemen? Magnificent capitulation. Chris, you got your mic on. I don't know if I can hear anything from you. Probably not. Good job. You don't have the mic on. No, not you. Oh. Do you have a hangover by any chance, Magnificent? A little bit too much rum last night. Ooh. Okay, I got my first scalp out of the way. I'm very proud of myself. Didn't work so good yesterday. It's about trying to regain your confidence. It's all about psychological. Trading's all about psyche. I mean, a day like yesterday when I was stuck in that trade all day long, then I ended up taking a loss because I couldn't get out of it. And then building it back up. It was not an easy day for me. And I got to come in here thinking the same thing. I got to build that confidence back up. I got a little bit too complacent. See, now we're getting back down here to support again. So I think we're at a solid support. Now I heard every time I try to predict the market where we are, and I'm going to show you a graph. I was asked last week, Magnificent, he's a good trader, Magnificent. He got a lot of secrets, but he's a good trader. I think he's more into psyche. Okay, here we come down. He keeps me grounded. I'm going to jump in this trade, I think, here. Where's my map? I forgot what I called it. There it is. I called it greed. I got to remember that. So when I was boasting about how high we were in the market, I got to watch this trade. Prepare ye in the name of the Lord. I'm 566 at 98. 566 is at 98 cents. 99 or 98. I'm going to go for it. I think I got the balls today. I'm changing them to 66. Closer to the money. At 98 cents. Okay. We're at 112, baby. Now, when you're up, 140 bucks, take that profit. Oh my God, what happened here? I'm out. Woo, baby. Jingle bells, jingle all the way. Oh, what fun it is to ride in a horse sleigh. Ooh. Oh my gosh. I can't complain about that. Woo! Thank you, stock gods. How much I love you, I don't know, but it's got to be good. Shit. I'm tickled today. That's what I like to have. Okay, calm down. Nancy, grab me a Valium and a shot of vodka. Come on. Magnificent, you know what to do. About face. Unbelievable. Damn, what's going on here? Oh, Treasury Secretary Scott Bessent calls himself a deficit hawk. Says he's completely aligned with Elon Musk on Deutsche. Now that probably tripped everybody out. That's a little bit different than what the market's been trying to tell you. And that's what I've been saying too from get-go. I said this is going to be beneficial to the market, not a deterrent. Because we let them son of a guns have too much money of our tax money. I need an A+ from the crowd. Well, I just farted. Man, I couldn't ask for a better timing. I can't tell you how happy I am right now. What'd you think about that, Polished Muffin? I like that name. I used to call somebody Muffin Cups. But that was a female. Man. Countdown to the Fed decision. You see, this is why I just can't stand listening to CNBC. I really have a hard time listening to them because they're so confusing and they're so wrong all the time. And they're biased. I think they're too biased in their own. They used to be not so politically biased. Like today, they're going to hire on that chick that they fired. Then they brought on some commentary of that other dude that they fired from, I got to find out what agency that was. I'd be careful right now buying puts. I'm about ready to sell all these. I can't believe jumping in the one right above it, the 566s. That made a huge difference in the price, profit. Okay, where are you? I gotta put a dot in there. I can't believe this. 166, I'm done. Thank you there, Polished Muffin. If you ever need anything, private message me. Well, you know what I mean. If you ever have a place where you think you want to buy something or sell it, or I'll just give you my opinion of it, but I'm completely out now. Oh, you didn't get to see my I'm glad I didn't have the TV on there in my face, because I was just having a flabbergasting time. I think I need to celebrate with some nice warm coffee and relax for a second, because I'm kind of afraid to take my blood pressure. That was an unbelievable trade right there. It makes up for anything I did wrong yesterday. Good call there. Yoko, where's my grade at? Yes. I want it, and I want it now. Hold my... I'm out. I held my winner as long as I could without suffering a heart attack. One half a star? Man, you were cold. You are cold. I'm so glad I got in that trade down there. That'll send shockwaves out throughout the market. I'm glad you didn't type in bitter. Oh. Cold. What's stopping me? What's stopping me? Because it's going to pull back. Pow pow. Then I want to buy the dip. The calls coming in are nuts. I'm going to go get my coffee. Then I'm going to come back and do it all over again. Oh, the hostility trainer. La 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 la. That should change some attitudes. Boeing's up $10. I'll be right back. I'm gonna get my coffee going. I've already got my limit. So I've got 565. Where's 565.10 for my first support. 565.12. For my first resistance. Pay attention, Yoko. Where's your levels at, buddy? Now that we broke pivot point now becomes support. I have to pay for levels? You gotta be kidding me. Well, you're just only a few cents off. You're 5 cents off. That's for the second one. Okay, I already got this. I got the next level, pullback support. I got it. Somewhere around 564. Right back down in here somewhere. 10-4. Do you see how I did that, YouTubers? See this trend right here? 1, 2, 3, 4. 1, 2, 3 bits, 4 bits. I'm gonna go get my coffee. I can't tell you how happy I am, man. I really, yesterday kind of ruined me. I didn't lose no sleep over it, but once the 4 o'clock comes, I don't want nothing to do with stocks. Shit. I'll be right back. Let's see what these. Oh, he got Jensen Wong on
I'm
there.
going to go for a moment before I go to robotics and autonomous vehicles. I want to put on my journalist, corrosive, sardonic hat and say, well, wait a second. What if the president puts 25% tariffs on and Michael Dell is slowed down? HPE, we talked about yesterday, they're slowed down. And it's
Shut up about the tariffs.
Not a cap on your growth.
Well, we want to build, we're enthusiastic about building in America as anybody. And so we've been working with TSMC to get them ready for manufacturing chips here in the United States. We also have great partners like Foxconn and Wistron who are working with us to bring manufacturing onshore. So long-term, manufacturing onshore is going to be something very, very possible to do. We'll do it.
But the Chinese are still a key partner right now. You have a lot of businesses. I would say 17% of your business.
Yeah, in the near term, I would say in the near term, tariffs will not, the impact will not be meaningful.
That's right.
But AI diffusion, like that last initiative by Biden, which said really there are only 18 friendly countries that we want you to do massive business with, that seemed arbitrary, if not judgmental, in a way that I would say it makes no sense.
As you know, as you just look around here, there are companies from all over the world. AI's gone mainstream. AI isn't some magical technology. It's incredible technology.
Well,
but it's used for everything. It's used for healthcare and education and agriculture. And,
yesterday, I thought you downplayed Groot. When we think of icons, we think of Groot. And in many ways, you gave that
I'm changing this
2.25
because
minutes.
questions are stupid.
Groot robot going to save most of the marriages in this country by doing the dishes?
Not political. Well, that's a fact.
Fiscal spending that makes up our GDP.
recent years. So if we're to take the administration at face value that they're looking to reduce government spending, at least in the interim, as they cut out bloat or whatever,
Not
we
you.
don't even go into what they plan to do, but that just seems to be the outcome from the policy that they're looking to do. Naturally, from elevated levels, maybe artificially elevated levels, and risk assets that were priced quite expensive for things to continue on the way that they were, it's only natural that we're seeing a reduction in valuation within the marketplace. Now, whether the Fed decides to dig their heels in and not feel like they're being pushed around by an administration that has outwardly wanted lower rates and a weaker dollar remains to be seen. I think I would have agreed with you that I would have thought that the baseline for today would have been that the Fed does something dovish to try to stabilize markets. But the fact that the expectation is not for that tells me that if you get that, you could see a massive upside move today.
Okay.
And I wouldn't have thought that. I would have thought before I read things that the risk was, that they failed to deliver. I feel like that's priced in now. The priced in aspect of this is that they're going to fail to deliver. So if they deliver something incrementally positive, could see a ripper.
So last week I was asked, or the room was asked, where are we on this graph? And I said capitulation. This week was discouragement due to the pow-pow, which means we're consolidating, and we started hearing stories about hitting the bottom. I heard it on Twitter and on, I haven't really looked at StockTwits much, but I'm hearing that from other traders too. And that's when fear kicks in. But to me, capitulation, fear's already happened. And that's what I predicted last week. So we could, like he just said, we could get a massive rally to the upside here. I'm about to hit my support and go back up and hit optimism again. And we've had weeks upon weeks of selling off. We've had 4 good weeks of selling off. So that's why I called it capitulation also. Now, I got into one of my favorite best friends, and he's no longer here, got pissy with me about how I was calling this out on a chart on this graph. And I think you can take it in different time frames. Some took it like in a yearly time frame, and I look at them, could be in a weekly, could be monthly, could be daily. Have like a 5-day sell-off. Because you could have a whole week that's red, and then all of a sudden you got 2 good weeks of green. So he more or less called me a fool out on this, and I just laughed at him. He was going all the way back to 2007. And I'm going, what? So I put them in different time frames, weekly, monthly, daily. You could even do it on a minute. Every time we have a pullback, and then the market decides to go ahead and bounce on up. But in this case, I was kind of looking at them as weeklies. Each one of them drops. But that's just my definition of it. Maybe I'm wrong. Maybe we've only had one time where we had fear in the market in the past 20 years, 25 years. I don't believe that. That's correct. We're here to get better. You're starting to sound like, what, Robert Frost? Get better day by day. That's our goal. Ain't that right, Yoko? Say yes. I'm not the trader I was 4 years ago, that's for sure, with all your help. I was a lost soul. Rob's seen the big orders coming in. Might have to change my support now, but I'm going to still keep it here. Drop down back to the 567s. Oh, man. Boeing shares are trading higher after CFO Brian West provided an outlook on the business and commentary on its cash expenditures, cash outflow. Well, they got a bunch of orders in. I know that's a fact. Well, what that one chairman said, that really, Fed speaker said, really puts a wrench in CNBC's outlook. PDD Holdings. Let's see what they got to say about it.
It's going to do so well. I mean, Amazon too, but particularly Walmart, Costco have been kind of gobbling up all the retail flows. I would think that
China knifed.
might have some role in that for discount shoppers. They certainly present a decent alternative.
Yeah, they certainly do. But we also know that the consumer is very anxious both here and elsewhere, right? Seeing consumer prices fall in February for the first time in 13 months fueled some more concern on that weak consumer spending in China for those dampened earnings. That could put pressure on those earnings, I should say, for PDD. And then you look at China, you've got your structural challenges. You look at the debt, the fallout, some of the property issues they've had there. So I think it's all playing a role. Yes, and consumers are looking for cheaper alternatives. We know Walmart has been executing extremely well on that front, but you know, they're one of the few. Walmart has really been doing good, while you've seen other companies like Dollar Tree, Dollar General really struggle, and part of that is the makeup of what they're offering. But if you look at a company like Temu, they're also offering those similar products, and you know, it depends where the consumer wants to go, and right now Walmart seems to be the king of that castle.
Okay. All right, like the analysis, PDD kind of at 125. I know it's right at the high from earlier this year, but we were trading above 160, 150 last year.
I think I'm going to go get a salad today.
One. Jeff, thanks for the perspective Let's trade it. Scott Bauer joins us from Prosper Trading Academy as the CEO. And Scott, a lot of good Chinese stocks out there. I'm kind of surprised PDD has been a little bit weak, but maybe that's an opportunity. What do you think?
Absolutely. That's what I'm looking at. And quite frankly, when you look at Temu, and you guys were just talking about people looking
Weak?
for value, less expensive.
The hell are you
stuff,
talking about?
You see those ads everywhere. Now, I've never ordered. I've never ordered.
I mean, what's a weak? Are you kidding me? It's up $40. Anthony. It is above the 200 now, if you look at it that way, maybe, but well, we're getting ready to squeeze here shortly. We're going to see if we're going to break out to a higher level right now. There's your flag. So that's flagging out. I don't know if I should jump in right now. Wait for that trend line. Let's see where that trend line goes. Well, yeah, that trend line's pretty accurate. I think I'll wait. I'm going to raise it up to the top of that there candle right there. Yep, that's it. That's got to be it right there. Okay, I'm looking at the SPX. Ooh, man, them things run up. 545 to 1250 is where they went. They went up $700. The SPXs did on the bottom. And that was the 5685s that I mentioned. Those are the 5700s. Now, I would have come out a big winner on them today. No, I wouldn't have. I had the 18s. I need to put on some deodorant. That don't smell too hot. We got a descending flag on the SPY, so we could drop on the SPY. It's about here, right about now. If we don't hold that, then we got 564.19 to take.